Hello and welcome. You're watching ET Now and I'm Nisha Poddar. Now this is a special coverage of the big IPO in the aviation space, Interglobe Aviation, that operates IndiGo Airlines. Now the issue has got a good response on day one, particularly from institutional investors. Now after, remember, some of the marquee anchor investors picked up 832 crores worth of shares yesterday, the institutional quota has already been oversubscribed on day one of the IPO launch. Now today, on ET Now, we bring you an exhaustive coverage, all sides of that particular story in the biggest IPO to hit the Lal Street in the last 3 years. We have the management exclusively with us. We have a whole host of experts also joining in. So Aditya Ghosh will be joining us, and along with whole experts, as well as, remember, the banker to that deal. So to give a 360-degree perspective on that big IPO, Interglobe Aviation. But first, to our in-house experts then, who've been tracking this particular IPO very closely. Utkarsh Chaturvedi as well as Yatin Mota, you've been on it for a long time now, and you'll get us all the perspective. First to you, Yatin, from the market point of view. Of course, it's a good response for the first day, but a lot of hue and cry was made about the aggressive valuation in terms of the price band. What are the concerns there? And now, with the response being good, are some of those concerns put to rest?
Yes, most of the brokerages believe that the issue is priced quite aggressively and the valuations look expensive. If you talk about Ambit Capital, they believe at 10.2 times FY15 EV/EBITDA, a ratio which is used for comparing or evaluating airline companies on valuation basis, is quite expensive and aggressive. In fact, at this valuation, Ambit believes that the stock is factoring in benefits of lower crude prices plus the aircraft trading profits. Also, ICICI Direct believes that at EV sales of 2 times, the airline stock is expensive and there could be no listing gains for retail investors. But if you talk about the QIB book and the anchor book and the kind of response they have received on the upper end of the price band, clearly indicates the kind of confidence that institutional investors have in the India story plus the IndiGo story, which is still a strong growing market. In fact, IndiGo plans to add new geographies internationally and nationally to their flying fleet, and that will bring in growth according to the institutional investors I spoke to. But of course, there could be no immediate listing gains, but the growth opportunities versus the mature markets like America do provide some kind of a safety or a cushion to institutional investors even at this aggressive pricing.
Oh, that's right. Institutional investors have been gung-ho about this particular issuance, Yatin. But let's take it to Utkarsh. Utkarsh, you track this aviation sector very closely. Tell me, is enough left on the table for the investors when it comes to this kind of valuation and the IPO that we have seen? Why should investors bet on IndiGo? Give us some of those sectoral dynamics which are going to really give returns to the shareholders who are going to put in the money in this IPO.
Nisha, what the IPO is majorly betting big on is one of the, if you see the market share of the company at this point of time has around 33 market share with 97 aircrafts. And now if you look at the order book of the company has an order book of 430 aircrafts. 180 aircraft will start coming from 2016, and then from 2018 you will have another 250 aircrafts coming in. So if you look at the next decade, the company will have somewhere around 500 aircrafts, which is the size of the Indian aviation industry at this point of time. Now, remember, this is the kind of game which the Etihads of the world had played, flooding in the market with a lot of capacity, with a lot of market, and then really taking out a lot of new passenger market share. Now, if you look at the A320 new order which IndiGo has given in, the orders are so huge that a lot of other airlines are not being able to get the new A320 news because of the fact that the Airbus is not really free to really give it to some other place. So if any other player has to get an A320 neo, either they have to wait for a very long time, or the second thing, they have to buy it on a lease which will be on a very high price. And when it comes to IndiGo, because they have ordered huge amounts, they've got really good discounts there. The other thing which is very interesting with the company is their fleet replacement policy. So the company replaces their fleet after every 6 years. So the average age of their fleet is somewhere around 3.1 years, which is again very new. So these are the whole dynamics which the IndiGo is very strong in when it comes to on-time performance, really strong fundamentals. That is where the company is really betting big on. And as I said, with 97 aircraft, the company has a market share of 33%. Going ahead with A320 news coming in, the company will be looking at a much better market share with all the new aircraft coming in.
All right, surely it will spur a lot of activity when it comes to the aviation space. Thanks so much, gentlemen, for joining us with all the details and those analysis going on this big IPO. But indeed, many questions and clarifications need to be really clarified, and on this particular high-profile IPO, and whom else than the man of the moment. Let's take it across to the management of Interglobe Aviation. Aditya Ghosh, the president and whole-time director, joins us on the show. Mr. Ghosh, so good to have you on the show, and many congratulations on the first day. The response has been good. In fact, some of the marquee anchor investors also did come in. Has the response on the first day been up to mark as you anticipated?
Well, actually, we closed the anchor book yesterday, which went off very well, 832 crores. Some of the really blue chip anchor investors from around the world. The investors have really spoken in favor of IndiGo. So that is obviously a great shot in the arm for us. Today, we opened the issue, the non-anchor QIB book, from what I last know, already subscribed to 1.2 times. I think it was 0.94 times in the first 1 hour. So feeling good, and more than anything else, now puts the onus on the management team and on IndiGo to make sure that we are able to come through on the trust that these investors have put behind us.
That's right, Mr. Ghosh. But remember, on first day, of course, retail investors come on the last day of the IPO generally. But on the first day, we have seen enough institutional response, and a good response at that. What was your selling point? What has really clicked with these institutional investors, especially your anchor book looking so good?
I'd like to believe that it is the fundamentals of the business. It is how unique the story of IndiGo is, how we've been able to create structural advantages which others cannot replicate. We've got a huge amount of growth ahead of us in a country like India, which is highly underpenetrated. We've got the cost structure going down because of the advent of the NEOs into our fleet. So all of those things, I think, came together. We've been on roadshows for quite a few weeks. We were happy we had the chance to explain our story in detail, and I'm glad they really voted for us.
Now, what has clearly, Mr. Ghosh, been a dampener for this IPO and did create a little bit of negative publicity is definitely your dividend policy. And has that really gone down well with the investors that you spoke to? And how did you convince them on that particular bit?
Well, I don't know whether publicity really matters, but we had the chance to explain. And more than anything else, now I can emphatically point you to our book and look at how the investors have responded to it. And I've always said it is a non-event, and now the investors, I think, feel the same way.
But that's obviously gone behind us, and now your book is pretty much complete. But going forward, once you're a listed company, what will be the dividend policy going ahead for a listed Interglobe Aviation?
It's not a policy, it's our worldview. We look at how profitable and cash flow generating we are. We look at what's our capex requirement, what's happening with the marketplace. So just like in the past, we've been very shareholder focused. We will be in the future as well. Just like in the past, in 2012, we took a very pragmatic view when market dynamics was such that even though we were profitable, we kept the cash within the company. In the future too, we will take steps which are in the best interest of the business. So we will follow that very prudent balance between, of course, being shareholder focused, because shareholders put in money into a business for returns, and as well as doing whatever is the right thing for us to do for the business.
Of course, it's a two-part IPO where some of the promoters are selling down some of the shares, and some part of money is making its way into the company as well as part of the IPO proceeds. Where are you going to utilize those funds, Mr. Ghosh?
Well, almost entirely, almost all of it will be going towards retiring a part of our part of our aircraft-related debt. As you know, we do not have any non-aircraft debt, and the balance is buying some ground services equipment. But mostly, it is just retiring the aircraft-related debt that we have.
So, give us your sense of your fleet order book as well as the funding plan for them going forward.
The same way that we've done in the past. We are primarily an operating lease-driven company. We will do the same going forward. This is a country which is highly underpenetrated, needs a lot of aircraft. we had the foresight and the strategic direction to be able to go and order a large number of airplanes at the right time. So we have 430 more Airbus A320neos coming in. So we will not only be able to cater for the immense amount of growth that is available in India, but also to do it at a lower cost, because the neos are going to deliver better fuel burn going forward.
Oh yes, you are a very low-cost airline, and of course you're profitable. But given the high competition from the likes of SpiceJet, Jet Airways, Air Asia, Mr. Ghosh, how will IndiGo really retain its market share going forward?
I guess again I've got to point you to our past. In the last 9 years, we have seen some really large players, we've seen small players, we've seen players who have disappeared, stagnated and shrunk. IndiGo has grown only in one direction, irrespective of which opportunity opened up, and all the challenges all of us face together. So going forward as well, we will compete with ourselves, keep track of profitability, and just like we've been consistently profitable in the past, that's what we'll be focused on in the future.
Now, apart from your operational performance, Mr. Ghosh, of course, you're cognizant of the fact that the policy in this particular space will also have a huge impact on your stock price and the company going forward. Now, the policy environment with talks of 520 going, as well as cap on fares, how will it really impact IndiGo?
Any policy changes impacts everybody equally. And we never complain about policy. All we look for is ways to make it even more efficient for everyone. And we are primarily a domestic focused airline only because India is where the opportunity is. We'll be focused on that. And as long as our cost structure is lowest, it wins all around the world, it will win in India as well.
All right, Aditya Ghosh, thanks so much for sparing time for us and joining us with all those details. And all the best going forward in this Big Bang IPO as well. So that was the President and whole-time Director of Interglobe Aviation joining us with all the details on this Big Bang IPO. But remember, if you're still thinking whether or not to put your money in this IPO, then you need to join us back after this very short break, because on the other side, we will discuss the merits and the risks in this IPO with a bunch of experts you would want to listen to. Stay tuned with ET Now, the IndiGo Takeoff. Welcome back. This is a special coverage of the IndiGo IPO, and you just heard the management right here on ET Now. And joining us now to take the discussion forward are some of the big experts of this 3,000 crore rupees issuance, which makes IndiGo, after listing, remember, an over $4 billion company. Joining me on the show are Kapil Kaul of CAPA, Dhiraj Mathur, PwC India, and Deven Choksey of Choksey Investment Managers, and also banker to this particular IPO, Vijay of Kotak Investment Banking is joining us on the phone line from New Delhi. Gentlemen, so good to have you on the show, and we'll try and thrash out this entire IPO and whether or not it makes sense for investments at this point. So let's start with you, Mr. Jaishankar. Of course, you've been working on this IPO for a long time. It's 1 year back that ET Now first broke the story that IndiGo is planning an IPO, and it's taken a little more than a year for this entire process to really pan out. Now, of course, valuations over $4 billion, that's what the company really expected, and that's what they have managed to also get. As far as the response from anchor book investors and institutional investors is concerned, that's been fairly good. Is it as per your expectations, and what was your selling point to these institutional investors which really clicked with them, Mr. Jaishankar?
Yeah, see, we have seen a very broad-based interest from institutional investors across geographies, be it the US, Asia, or London, very much in line with what we anticipated. The company is one of the lowest cost in terms of operations, as you all know. And as you benchmark this company on operating and financial metrics compared to some of the other LCCs, such as Sprint, Southwest, Ryanair, EasyJet, JetBlue, you will find that IndiGo compares very favorably. And it is because of this that you have seen the kind of response that you see in the anchor list.
Right. So, Mr. Jaishankar, hold on to those thoughts, because let me go across to an equity expert also joining us. Deven, what's your feel about IndiGo? In your view, what are those selling points which will really click with the shareholders, and what are those concerns that you have in mind before putting in money in this particular IPO?
Well, I think considering the fact that I think IndiGo has been the most successful company within the global peers in the LCC space in last 7 years out of the 9 years of their operations, I find that I think they have very ably demonstrated the management I think for running the business. In this particular period when we have seen the higher ATF prices and lower occupancy or the lower load factors, even in those period I think the company has ended up producing not only good profits, but at the same time I think have ended up generating the higher amount of return on net worth. The allocation of capital employed I think has been really good. So all points put together, I feel that the company's management has proven their ability to withstand even the turbulent times in one of the most riskiest business, I think the passenger aviation. I think they have probably I think succeeded with it. So certainly I think that demands a good amount of look and attention, and it's merit I think that I would call it I think to look at. Yes, I think we have a subscribed view on the company, particularly because we believe that in Indian aviation space I think there are not many companies which have succeeded with a similar kind of a track record. One. The second aspect is about the floating stock of the company. I think post listing is going to be relatively on a lower side. So certainly I think the demand in a given situation could possibly keep the valuation relatively on a higher side. So even though I think the valuation may remain little bit stretched I think while offering, I would think that it is more of a supply of paper side kind of a situation which is remaining limited in this space, and that's where I think you are probably going to get relatively higher valuation for this company.
Right. So Deven pointing out about the higher valuation, that has been a talking point. In fact, I'll come back to the iBanker on this deal on that one. But first, an expert on the aviation space, Kapil Kaul, how do you see this IPO changing the scenario and market activity when it comes to the aviation sector? Of course, there are many right now benefits because of oil prices going down. Do you think enough has been left on the table as an aviation specialist? How do you see that?
Firstly, I think we need to appreciate the performance of IndiGo in the last 9-10 years. As we see it in the last 9-10 years, there's been an exceptional performance because the market conditions were extremely trying. Very adverse market conditions, very tough external and internal environment. And to shine out like this is remarkable. So I think so far it's been till date we call it a excellent story. We see IndiGo having a strong brand, proven product, very strong cash reserves, and more important, secure growth pipeline. So excellent so far. Well, I would think that going forward, the focus should be on continuing to deliver on stronger customer deliverables like on-time performance, asset utilization. Make sure that they keep the momentum like they have been doing it for the last 9-10 years. So I think it's more internal to them now. I mean, for IndiGo to continue performing at the levels they have, it's an internal challenge rather than external challenge.
Right. Right. Let me go to another specialist then in this area. Dhiraj Mathur, what do you make of it? Of course, it's a thumbs up coming in from Kapil Kaul when it comes to IndiGo. But remember, strong cash flows as well as consistent profitability, that have been really the strong points. Going forward, do you think these are sustainable? Because IndiGo, looking at it for last 2 years, it was IPO ready in some sense. There was some stake sales talk also going in. So they have built up that valuation ahead of the IPO for a long time. But are these sustainable going forward as well, in your view?
Yeah. So I think that the amazing response that IndiGo has gone is as much a recognition and acknowledgement of its own performance as Kapil and others have pointed out. I think it is equally an acknowledgement of the Indian market and the Indian economy. And that's where the issue of sustainability, that's how I would look at the issue of sustainability. Now, you know, cash flows are really a function of revenues, your sales and your ability to collect. And that is linked to very closely to the Indian market, to the Indian economy. as has been pointed out before me by others, this is a highly underserved market. It's highly underpenetrated. Less than 2% of our population travels by air. On the supply side, we have one plane per million population. The United States has something like one plane per 50,000 or 60,000 people. So we're under-penetrated, and we have a tremendous limitation in terms of capacity. So I do believe that the Indian market has, and it has, if you look at the performance of the civil aviation sector in the last 10 years or so, this has been one of the fastest growing market, and it has sustained a CAGR of over 12% plus on domestic and about almost 10% on international traffic. Right. So the market will support the cash flows. Now the profitability is a function of costs, and in terms of what the airlines can control and in terms of what the government can do. There are, there's this issue of taxes. Everyone is aware of it. The good thing is most state governments have started realizing that. And so you've had states like Andhra Pradesh, Chhattisgarh, who've reduced sales tax to almost zero.
Right. So high tax.
And of course the lower, sorry?
Yes, of course. So, Mr. Mathur, of course, higher taxes, even on ATF, as well as lack of infrastructure, as well as some of the policy constraints. So, all of these have been really dragging down the aviation sector. Let me go back to the iBanker on this IPO. Mr. Jaishankar, what do you see in terms of valuation drivers, and what have you really communicated to the investors going forward? Because there was a lot of chatter about aggressive valuations when the price band got announced, and the equity guys are still not convinced. So what have been those valuation drivers? And of course, you've done fair amount of peer comparison globally as well on this.
Yeah, sure. See, Nisha, what tends to happen whenever you get an IPO to the market is people look at global comparables wherever relevant. And in this case, as I said, people have looked at other airline operations. There are a fair number of long-only investors, as you would notice, who have come in the anchor. And typically, long-only investors look at the long-term growth, the short to medium-term growth as well. As some of your panelists said, investors see India as a multi-year growth story on the airline side. And obviously, IndiGo is the best position really to leverage of that long-term growth story. On the cost structure, which is where the company can do its best, they have one of the lowest cost structures. And they'll continue to work on that. They're a highly focused team. So that whatever happens on the revenue front, you'll always find IndiGo sharply focused on protecting its margins, trying to see how well it can perform on the margin front. And as some panelists have already commented, the return ratios are clearly one of the best. So what investors really care for? They care for the best growth story, the best margin structure, and the best return ratios. And when all of these really fall in place in comparison to the global peers, whether it's AirAsia, Ryanair, Sprint, etc., then investors get comfortable. So end of the day, valuation has been discovered by talking to investors, and that's how it's been set. For some of the investors who are focused far more in India, I think they may be a little constrained by what they may not know about the global peers, and that's why you may have little different voices which you are referring to.
Right. So, Mr. Mathur, coming back to you, do you think that this particular IPO will be a turnaround story for Indian aviation when it comes to capital market activity? Do you think that it will spur a lot of activity in this particular space? And which one do you think could be the next one to hit the IPO market from this aviation space then?
Well, there aren't that many options in terms of which, there aren't so many players. We just have 9. Definitely this marks a significant milestone in the aviation sector. We need more public players. It improves access to funds. It imposes a discipline on, the market imposes a very severe discipline on listed companies. So and this successful IPO will will provide comfort and confidence not only to the airlines but also to investors that yes, this is a sector that is growing and has a potential.
That's right. So everybody is talking about the potential. Now, Kapil Kaul, coming to you, you know the sector very well. Now, of course, the penetration is low. There is a lot of headroom for growth. In fact, IndiGo itself hasn't reached out to so many cities which come in the category of tier 2, and there is so much growth potential there. But do you not think that there are several challenges when it comes to the infrastructure constraints, and is that going to be a big challenge for this sector?
Well, certainly, I think there is no issues about the growth upside. In next 10 years, you're going to see the domestic market touching almost 220 million, so it's almost 3 times the current growth levels. And it's not going to stop at 2025, it's going to go right up to next 3-4 decades. So India's, there's a huge upside. And frankly, we often underestimate the kind of upside that the aviation story in India is. And I like to add that the valuation that IndiGo has got is apart from excellent performance and what they have delivered in very adverse circumstances. It's also a comment on the marketplace. It's also a comment on the huge upside going forward. It's also a comment on India's story. And it's also a comment that people who perform exceptionally well in adverse circumstances would get a valuation upside as IndiGo has got it. But having said that, I think there are constraints. There are regulatory constraints. There are infrastructure constraints. And I'm hoping that the new policy framework and the attention that the government is giving the sector, we would see over the next few years the dynamics shifting. Because if we don't provide infrastructure and we don't ease up the regulatory bottlenecks, these will become structural challenges, which is not only for IndiGo, for everyone. But I think the government is seized of it. The new policy could throw some light in easing of these structural issues. And I'm hoping that the new civil aviation policy adds to the strength of the sector.
Of course, policy really defines a lot in every sector, and government is looking at many sectors, so aviation could be one. But Kapil Kaul, tell me in specific to IndiGo, there are so many airlines in the country which have international tie-ups. Is that going to be one of the constraints going forward for IndiGo? And do you see, as it expands further, that it will be one of the requirements for the company to have an international tie-up? I know pre-IPO they were probably in talks. They didn't go ahead with a stake sale or a tie-up, but going forward, is that going to be one of the important things to watch out for?
I don't think IndiGo needs an international partner. I never thought that IndiGo needs an international equity partner, and I don't think IndiGo needs any international partner to bring some expertise. They're very well placed. I think they will distort their positioning if they bring in some partner at this stage. Over the next 5 years, one can look at it, at least in the near term, I don't see any rationale for IndiGo to change their business model or change their management structure. Obviously, we feel that they need, post this listing, to deepen their management sort of a depth, reduce dependence on few people and broad-base the management structure. So they would need to relook at the next 10 years much differently from what they have done over the last 10 years. But I don't think they need an international partner at all. I don't think there is a case for an international partner for India, either an equity or a partner which brings some expertise. They need to now look internally and see that the structures they have now, is it going to be useful for us for next 10 years? What kind of a management drivers we need? What kind of a board strength, framework we require? I think the new set of dynamics need to be looked from IndiGo's perspective, but not certainly in external partner. I don't see a need for an external partner.
Most of the listed companies, if they have to sustain the kind of valuation they have in the marketplace. But my final question to Mr. Jaishankar, and this is the final comment, if you can quickly throw more light on the IPO scenario. Of course, CCD, IndiGo, we were waiting for. These are the largest that we have seen in the last 3 years. Is it the beginning of an IPO season? Festive season is also coming in. I know that you're traveling all across India and making the pitches currently. Of course, you're not going to share all the details, but how thick is the IPO pipeline at this moment, and is there enough absorption capacity in the capital markets?
Yeah, see, as you have seen in October, we have had 3 good IPOs. Apart from CCD and IndiGo, you also have SH that is hitting the market. And you have seen that there is a pretty healthy pipeline of documents filed with SEBI. So some of those companies will start their roadshow plans and will shortly hit the market as well. And across the industry, as you speak to other bankers, you will see that there's a fairly healthy level of discussion going on with potential targets that could hit the IPO market. So I would say from a supply side, it's looking a lot better. On the demand side, if you look at the overall inflows into the Indian market, it's probably going to be in the region of about $15 to $20 billion of money coming in. A lot of it far more skewed towards domestic flows because the mutual funds have seen very strong flows and to some extent has offset the lesser flow that we have seen from the FII side. But having said that, even on the FII side, the sentiment is very positive because we have been the biggest beneficiary among emerging markets, though the overall flow to the emerging markets has slowed down.
Of course. So this is one place in the capital markets or in the marketplace, Mr. Jaishankar, where the domestic institutional investors are not as active as the FIIs. So at least in the IPO space, FIIs have been very active, which has not been the case otherwise in the market. But gentlemen, completely out of time. Thanks so much for your time. Deven, Dhiraj, Kapil as well as Jaishankar. Thanks so much for joining in. Of course, it's a big bang IPO. Next few days are going to be important in terms of retail participation also coming in. Institutional investors have given it a thumbs up, but retail participation is going to be the key, and that needs to be watched out for. It's a large issuance, and ET Now will be tracking every bit of it. Thanks so much for tuning in.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.